Aloha and welcome to Java. Thank you kindly for joining me again. It's September 12th, 2024, and it's Thursday. So, after having an interesting day tomorrow, we've got more to look forward to today. Just want to leave a little note. We had a great Discord discussion yesterday, and you can join us at any time. We have chats running constantly, pretty much, but we have our discussions live on Wednesday afternoons. I'm probably going to start one on cryptocurrency soon. So feel free to come on into the room and be ready for the next one that we have. With this, let's start into the markets. Now, our favorite risk indicator, the MMRI, has risen a bit. We're at now 232.2, so it's come up a bit from the high 227 area that it was yesterday. The fear greed meter also rising on all of this. So if you look across the board here, quite green. And that in itself is a bit of a flag because you can't have everything at once. It's got to be a bit of a balance, if you will. So with this, what's the real story behind it? Watching the 10-year yield, relative strength of the dollar. Now, both of these gained yesterday. There was a bit of a drop after the CPI readings. And then once it got digested a bit by the markets, and everything began to rally back and build back. Now, we'll talk about that in a bit. So going to cryptocurrencies, we've got Bitcoin right under 60,000 for that level. Now, this is a level of resistance. So just to warn you that right now, it appears in these markets that the probability is more towards a bit of a pullback. We are expecting prior to market open some inflation readings, and I'll speak about that in a moment. But at the moment, we've got stocks in the green. We've got the futures also in the green. But with these, we've got higher volatility rising slightly, which is the fear gauge, and gold and oil also slightly positive, but really relatively flat. So the story is it's looking to basically push up the stock market at the moment, kind of level off during the day. Now, the tech sector was the one that rallied yesterday, and we've got a few more things on that. Now, continuation probably today with the light volume. We've actually got PPI today, as I spoke about this yesterday, about if it was the high inflation print could crush it. Now, today is similar with PPI, but I expect it to do the same. They'll keep it in line with expectations. No huge moves. Now, what I wanted to bring up is this chart over here. This is the yield curve and payroll growth uninverting. So as the yield curve uninverts, that is typically when unemployment increases dramatically, and then the recession basically rolls in. So now that our yield curve has uninverted, it's a major signal that that is the likely outcome for what we've got to look forward to. Now we've still got selections ahead of us and a few other things. So with our calendar, prior to market openings, when we're getting the reads, now we're getting PPI, but also jobless claims. So I expect that to have more of an effect, if any, on the market. But they realize this. Tomorrow morning, Friday, prior to the market open, we've got a couple of things coming out. So the market is looking forward on two things: ECB rate cuts and also the expectation that inflation is dropping. So as if the inflation does come in higher, that could really put a kink in the works. But right now, we had basically, prior to open, Asian markets were pretty much in the green, and we've got the European markets also looking quite strong. So between the two, it's lending strength to continue forward. Earnings for today, not too much too exciting, and not really any major earnings reports for tomorrow. So with this, I want to go into a few specific companies that this will kind of give the overall picture, but also promise to be some movers for today. So not financial advice. but I would like to bring some of these up. Now, on the rally that came in toward the end of the day was a good deal on the chips and NVIDIA. So the CEO is saying that there's large questions on the investors' minds, mostly moving forward, and demand for these chips. However, we've got this other kind of side story that they might face disaster ahead. Now, they're looking towards the stock price, but aside from the technical analysis, they are a main target. And when I say that, it's because every other company in the sector is looking to compete with them. And it looks like there are a couple of that are beginning to emerge. And if they are successful, it could put some serious pressure on NVIDIA. So just urging a little caution there. We've got the Boeing factory workers. They're deciding on the strike. So that's going to weigh on the stock if they cannot come to an agreement and they do indeed choose to strike. They'll cut the production. That'll, of course, hit the stock. We've got Morgan Stanley also advising about the drop in NVIDIA and also chip sector, saying we got overcooked on the whole AI theme, artificial intelligence. So my personal opinion is not for forward. It did immediately for the time period, but eventually it will catch up to that. However, we are looking like there's some unwinding to be done in the meantime. So a couple of other things coming out. The car industry in general weakening, particularly the electric vehicle space. So Stellantis is suspending their ETH on poor Europe demand. Now, this is their main car market. We were talking about Volkswagen. In fact, we're going to talk about them a little bit more. So Stellantis now, the latest in this, they're going to take a hit. STLA, they are also the head of much other major losses, most of them through Jeep and also the truck sector. So not selling in the manner that they were expecting. I want to bring this up. I can't speak much about it, but they want to look at boosting their supply. But the numbers that came out for the companies that are behind this, they rallied. And now a lot of this is not as big of a deal as they were initially making it out to be. So they're beginning to drop. So this is another one that will be taking a hit. Okay, back to Volkswagen. They're ditching the decades-old job protections. We spoke about this yesterday. So they are trying to hold off as long as possible on doing these closures within Europe. They are one of the largest ones. Their numbers, they're almost 33% of the GDP for Europe. So if Germany goes down, basically it's going to have some drastic fallout for the rest of Europe. So Germany has now closed its borders and they're doing passport control. And they're telling the EU they can't take any more migrants. They're saying the government resources are at a breaking point. And the interior minister is also talking about the public funds for caring for them are almost wiped out. So with this, they have decided to close down and not accept any more, despite the Schengen Agreement, which has been in place since the Euro, that they would all have basically open borders. So it's getting so bad that they are going against this agreement that they had, and that can have some serious implications as well. So with this, we've got the EU acknowledging its members still rely on Russian gas. They're saying 18%. I think it's more than that of the bloc's imports. Now, this is direct from Russia. A large portion of their fuel and energy also come through third parties because it's sanctioned. So Russia sells it to, for instance, countries in South Africa, and then South Africa will resell it to the EU, of course, a bit more expensive. However, their alternate is United States energy, which comes at a premium of approximately 42%. So not good for them. They can't survive that. And they've got to get their ducks in a row prior to winter hitting. So with this, we've got another story about artificial intelligence. And this comes from Google's former region head saying China is about 6 months behind the United States. And that because of some of the demographics and factors there, that adoption would take off much faster in China once they hit that critical mass point. So AI, it's a huge race. We spoke about this before, but they're looking to pull forward. And with all of these things going on, all of these currency wars and trade wars, we've got the Philippines calling a summit in the Pacific for allies because they're now concerned. One wrong move could trigger war in the South China Sea. Now, they're accurate. There have been a lot of collisions, close quarters, kind of bravado, if you will, in that area. And with all of this as well, we've now got North Korea launching multiple ballistic missiles, uh, basically because he just wants to prove they're ready for war and that they don't want to be kept down. So, with all of this going on, it's just basically an escalation and an increase in risk. Now, what this is covering up in the background is what's going on with the markets and the currency wars. Now, I just want to bring up also the yen carry trade is not done. Yesterday, along with what happened with our inflation numbers, there was a drop in the markets. And I believe looking at behind the scenes, that was basically related to that discrepancy, if you will, as well. Looking at bonds between both Japan and China, there was a large number of buying of Chinese bonds yesterday, and it appears that it might have been their government. So, with that same type of intervention, if you will, that the Federal Reserve has been doing in order to keep the markets going, push out this credit, keep the liquidity going, keep the basically this illusion of all of this going up. What it's doing, it's boosting stock market, although artificially. So this could not last very long. So depending on what the numbers come in today, we could either see a drop once they come out or watch it kind of level up and continue on this upward path, slowing down, but continue this upper path at least to Friday, bit of sell off toward the end of the day on the nervousness and anxiety. Everyone is waiting until the Fed's decision next week. So that's really when we're looking at that time period of serious instability, probably just some chop until then. So with that, I wish you a green trading day. Just watch all the volumes on as always. And until I see you again, my friends, stay free.